everybody has to use Ethereum basically that uses this crypto rails, unless you're just in the Bitcoin world. But everything that we've talked about, and everybody will have, even if you're not very familiar with the space, will have heard the term DeFi or NFTs or tokens. Basically, most of that is still being built on Ethereum. And as you said, the network. So what is this Metcalfe's law that you and I have referred to? Metcalfe's law is, it really started to become understood in the 80s, and then much more so as mobile phone networks started, these giant connected networks, right? Because digital technology allowed networks to connect. Before it's humans, we couldn't connect with each other in the same way. So networks connect with mobile phones, and suddenly they explode in value. All these phone companies, huge companies. And if you added them all up around the world, they'd be worth tens of trillions probably. We just don't even think of it in those terms because they're fragmented networks. Then the internet comes along, this free network, and everybody builds on top of it, and they create network effects. Like the most classic example is Facebook. Facebook connects us with friends and family, and in exchange, they get your data, they sell you adverts, so you've got a bunch of people using it, a bunch of businesses now building on it, and this advertising monetization structure. Shareholders get rich. You and I get to unfortunately meet somebody from university that we don't want to talk to, that we met 20 years ago and we're now connected with again. It's that. But the network that Ethereum and Bitcoin does is different. You're the owner of the network and the user.
Hello and welcome to Money Talks. In today's video, Real Vision CEO Raoul updates about key strategies that you need to know in order to thrive in an economic collapse. Raoul also talks about some ideas that can certainly help average up how you think about getting through the current recession. Whether your money is all in crypto, in a 401k that's reduced by half, or in none of the above, the ideas that Raoul shares in this video may be some of the most important ideas you've ever heard.
And so if you're printing too much money, you're creating less scarcity. So yes, there's money everywhere, but the money has less value. So once you understand that, you say, well, what does it mean? The dollar hasn't collapsed. It's kind of where it was versus the euro in the last 5 years or whatever it is. And then you say, but my $50,000 salary now can buy me much less shares in Apple, Amazon, Google, Microsoft. In fact, units of the S&P 500, I suddenly can't buy as much. Since 2008, it's a fraction. I can buy like a third of what I could. Same with real estate, same with gold. And then you're like, assets have suddenly got expensive. They haven't. The value of your savings has gone down, or your money. So you can't afford to buy assets. What is an asset? An asset is deferred consumption from the future. I buy a house, I sell it in the future, I get to retire, whatever the things are, right? We don't buy the S&P because we want to hang it up in our wall. We buy it because we want to sell it at a future date to realize money. So that means our future selves are now poorer. That's essentially what this means. That's what currency debasement is. So Bitcoin comes along in 2008, in the middle of the crisis. It's kind of like it was perfectly prepared for this and said, Satoshi goes, hey, look at this. I can create an algorithm that only creates so much of this thing, the Bitcoin, and it can never vary, ever. So therefore, this is scarcity that humans can't fuck around with. Now, humans have this propensity to fuck around with scarcity because they're economically incentivized to do so. Here they can't. So then they become economically incentivized to own this asset because it's scarce and it cannot be changed because it has this consistent supply curve and a limited number. So Bitcoin becomes this great store of value.
Expectations already favored further downside during this month. The so-called September phenomenon, which normally sees BTC price lose ground at September, and so far there has been little evidence that this year will be different to most. Currently, Bitcoin is down 1.5% in September 2022, And while the losses are modest, there are plenty of potential catalysts on the horizon. Macroeconomic turmoil remains the name of the game in much of the world, the emphasis increasingly shifting to Europe as the energy crisis unfolds and the euro reaches 20-year lows versus the United States dollar. Stocks are also struggling in the face of a still strong greenback, leaving little room for a breakout to the upside for cryptocurrencies. That said, macro Bitcoin price bottom signals have been flowing over in recent weeks, resulting in a handful of analysts remaining quietly confident on the outlook.
And then I observe the sentiment, I observe the sirens, I hear the song, but they don't affect me. Well, they obviously do affect you, but you try not to let it affect you as much. You distance yourself from price action because your theory is that it's going to go from here to a lot further over time. That key word is over time. And we've all said, all of us have said, and we know it does this a lot on the way. So then if you know that it's a known, why the hell when it happens do people forget? It's so funny when Bitcoin and ETH crashed last year, fell 55% from the high. I spoke to my wife and I'm like, God, everybody's freaking out, And she's like, why, what's happened? I said, well, it's down 50%. She said, but you said that's normal. And her exact words, so just shut the fuck up. You should be buying here, not freaking out. I'm like, yeah, true.
Traders already expecting a retest of lower levels close to June's $17,600, however, saw little reason to alter their perspective.
I think there's three things you need to do here. Income. Income pays your bills. Income can pay your mortgage. Income does everything. Without income, you got nothing. Optionality. You need to have things that can pay off. A startup or a hobby business on the side. That will never happen if you work for a corporation. Focus on your income, work hard, look for other opportunities that can leverage that. And then thirdly, if I've got this income, look for investment opportunities that can change my life. The financial system's not as bad as it was. So they're not the bad guys this time around. They got told off. They got said, don't borrow as much money. The individuals have not been great, but not terrible. The government borrowed a lot more and corporations borrowed a lot more. So to put it in perspective, the US is about 25% of the global economy. Yet they have 100% equivalent of global GDP in debt. So this is the most indebted economy in the history of world economics in terms of global debt, because it's so big. Now, the US is not the only one here. Europe's got massive debts. Japan's got massive debts. So China's got big debts. Everyone's got debts because we borrowed for our future selves. Why get enough tax income for the road system I need to build? Why not just issue more bonds and build it now? Because the bet is I'll create more productivity in the future and then GDP grows and it's easier to pay off. And that generally works okay. Like the bet that you took is, will my income be able to cover this debt in future? In most circumstances, it is. But what happens is when your debt becomes so large and something happens to your income, then you start to say, well, can I pay this debt?
On macro markets, the Federal Reserve is due to take a backseat this week with important economic data next due on September 13th in the form of the Consumer Price Index print for August. There is little chance for risk asset traders to rest, however, as events in Europe are already providing a new theater for volatility.
The American dream that came out in the 50s was about the wonder of economic growth, technology, peacetime, and abundance and opportunity for everybody. Everybody could be the president, everybody could be rich. That mentality is terrifying because it creates a misalignment of present self and future self. So everybody feels like they never got there. This was the whole book Fear and Loathing in Las Vegas by Hunter S. Thompson, was basically this, is that's what Vegas is about. We don't have gambling in the same way in Europe. You can go and gamble. It's just not a big deal. But in America, it is, because it's about this future expectation of yourself, I think, driven by the American dream. And obviously a frontier style economy and how the US, gave birth to itself. So the American dream was set up, and a whole construct was set around it. And then two bad things happen. Bad thing number one is everybody goes, this is fucking amazing. I want to have kids, right? Prosperity, great time. So all of the people who'd gone through the war, or maybe two wars, had kids. Those kids were the baby boomers, and they had too many kids. So what happens is if two of us go for a job interview, we have a 50-50 chance. If 1,000 of you do, you have a 1 in 1,000 chance. So what happens is if too many people come into the workforce at the same time, they compete with each other for wages. And if you look back and inflation adjust wages for the average median American, or the average American, particularly the median American, over the last 45 years, it's not gone up at all. So there's been no productivity growth. The miracle never happened.
So what do you think is the best strategy to thrive in an economic collapse? Tell us in the comments. Also, don't forget to like and subscribe. See you soon with the next video. Thank you so much for watching.